Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve one example of income from house property. This example was asked in SPPU TYBCOM examination April 2024. Subject taxation. So this example was asked for 7 marks. So the question is given on the screen. From the following information, compute the income from house property of Mr. Ravindra for assessment year 2020, 24, 2025. From the old tax regime. Particulars and amount is given. Municipal value 3,60,000. Fair rent 3,70,000. Annual rent 4,80,000. Municipal tax is paid rupees 36,000. Then amount spent on repairs 36,000. Then the house property was vacant for 1 month. Next is interest on capital borrowed for financial year 2023-24 is 1,80,000. So capital is borrowed, the interest is 1,80,000. Now next is the additional information is given that Mr. Ravindra borrowed a loan of rupees 20 lakhs at 10.5% on 1st July 2020-21 from SBI bank for the construction of the house. Okay, and the construction is completed on 1st October 2022. So Mr. Ravindra has borrowed a loan of 20 lakhs and interest is 10.5%. Okay, so here we have to calculate the how much is the interest pay on capital borrowed. Okay, now how to solve this example of income from house property. First you will write computation of income from house property of Mr. Ravindra, assessment year 2024 25. Now we will follow this following steps. Okay, so first step is what we have to find the reasonable expected rent. Okay, so in that for calculation of reasonable expected rent, that is step number 1, we have to find the maximum of the following. Find the maximum of the following. From this two we have to find the maximum amount from municipal value and fair rent. Now how much is the municipal value given? 3,60,000. So write in front of municipal value 3,60,000. 3,60,000. Okay. Now next is fair rent. How much is the fair rent given? Fair rent is given 3,70,000. So write 3,70,000. Okay, now from this two, whichever is maximum amount, that is to be considered. So fair rent, that is 3,70,000 is the higher amount, so we are taking it as a maximum amount. The next step in step number 1 is find the minimum of the following, that is maximum amount and standard rent. How much did we get the maximum amount? That is 3,70,000. Okay, now standard rent, is there any standard rent given in the question? No, standard rent is not given, so write not applicable or leave dash. Now next is now minimum, that means now what is remaining? 3,70,000. 3,70,000 is a reasonable expected rent. Step number 1 is completed. Now step number 2 is find the rent received or receivable. Now what in the rent received, what we have to do? Annual rent minus unrealized rent. Okay, so now here in the question unrealized rent is not given. Okay, only annual rent is given. So annual rent is how much? 4,80,000. 4,80,000 is our annual rent. Okay, so what will be our rent received? 4,80,000 only, because there is no unrealized rent. Okay, now step number 2 is completed. The value of step number 2 is 4,80,000. That is what rent received. Now step number 3. Step number 3 is what? Compare step 1 and step 2, whichever is higher or more. Now step 1 amount is 3,70,000 and step 2 amount is 4,80,000. So which is greater? Step number 2, that is 4,80,000. So we will take 4,80,000. Okay, now from this 4,80,000 we have to less the loss due to vacancy. Okay, that is our step number 4. So less loss due to vacancy. Now see, in the question there is period of vacancy, that is for 1 month the house was vacant. Okay, now this amount spent on repairs, that is not to be considered for this calculation of income from house property. Okay, so leave it. Now, loss due to vacancy. Now, loss due to vacancy, the house property was vacant for 1 month. Okay. So, what is the actual annual rent for entire 1 year? The actual rent is annual rent is 4,80,000. Okay, now we have to find that for per month. Okay, what is the rent? For annual it is 4,80,000. So what you will do? 4,80,000 divided by 12. Okay, and multiplied by 1. So how much we will get? Per month the rent is 40,000. So this 40,000 was the 1 month rent, and due to that 1 month house is vacant, that's why 40,000 was a loss. Okay, so from 4,80,000 less 40,000, remaining will be called as gross annual value. So how much is remaining? 4,40,000. Okay, so 4,40,000 is a gross annual value. From this gross annual value, less the municipal tax paid by the owner. Now how much is the municipal tax paid by Mr. Ravindra? It is 36,000. Okay, so less the municipal tax 36,000. So 4,40,000 minus 36,000, 4,40,000 minus 36,000, the remaining will be called as net annual value, that is 4,04,000. Okay, so 4,04,000 is our net annual value. From this net annual value, we have to do some deductions. These deductions as per section under section 24. So first is standard deduction and interest on borrowed capital or loan. Okay, in standard deduction we have to deduct 30% of NAV. NAV means what? Net annual value. So 30% of net annual value. How much did we get the net annual value? 4,04,000. 4,04,000. So 30% of 4,40,000 is 1,21,200. Okay, clear? Now next is what? Interest on borrowed capital oblique loan. Now in the question they have given interest on capital borrowed for financial year 2023-24. How much is the interest on capital borrowed? 1,80,000. Okay, on this there is some additional information. So Mr. Ravindra borrowed a loan of 20 lakhs at 10.5% on 1st July 2020-21 from SBI Bank for the construction of the house. Okay, so he has borrowed a loan of 20 lakh. For why he has borrowed the loan? For the construction of the house. The rate of interest is how much? 10.5%. The construction is completed on 1st October 2022. Okay, now for this we have to do the working note. Okay, so in the working note we have to find the interest on pre-construction period, because he has taken a loan of 20 lakhs at 10.5%. Okay, so obviously this interest is given on the capital borrowed, and plus he has taken the loan of 20 lakhs. So for that we have to calculate the interest, how much is the interest which he is paying for that, for the construction of the house. So write in the working note, interest for pre-construction period from the date of loan taken. Okay, on which date the loan is taken? On 1st July 2021. Okay, to 31st March, because financial year ends at 31st March. Okay, then of the year immediately prior to the year in which the construction is completed. Now in which year the construction is completed? In the year 2022. Okay, so from 1st July 2021 to 31st March 2022. Okay, that is the financial year end. So from 1st July to 31st March, how many months are there? 9 months. Okay, for 9 months what is the interest which he has paid on 20 lakhs to SBI bank? So 20 lakhs multiply 10.5 divided by 100 multiply 9 divided by 12. So total interest he has paid, that is 1,57,500. Okay, now this 1,57,500 is allowed for deduction in 5 equal installment. Okay, so for per installment, okay, what is the interest which he has paid? This interest is what? For total 9 months. Okay, so installment he has paid, that is 31,500. So 1,57,500 divided by 5. Okay, because in 5 equal installment, so installment amount for one installment is 31,500. So therefore the total interest is 1,80,000. Okay, so interest on capital borrowed is 1,80,000 plus 31,500 is equals to how much is the total interest on capital borrowed? 2,11,500. Okay, so here you will write in front of interest borrowed, that is 2,11,500. Okay, now you will less this two amount from the net annual value, that is 4,04,000 minus 1,21,200 minus 2,11,500. The remaining is 71,300. Okay, so this is our income from house property. How much is the income from house property? 71,300. Okay, so in this way you have to compute the income from house property. So basically this is the solution or the correct answer for this example. I hope student you have solved this example in this way, and the final answer which you have got for income from house property is 71,300. Okay, so thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon.